everyone, and welcome back to the channel Algo Driven Lab. And in today's video, we're gonna consider backtesting, just kind of revision of the previous strategy. And in this video, we're gonna reconsider exponential moving average of 10 to 50 crossover strategy, which you also can find on this pop-up link in the last video. And we're gonna consider it for the consistency, for the robustness, whether the strategy is worthwhile at all. And one of the robustness today is to consider and compare whether the strategy is worth or not with a buy and hold strategy, both with the asset which we're going to consider and with broad index, which is S&P 500. Yeah, and I guess this video will be useful for traders and investors who are engaged with both trading and investing activities. And actually today we're going to work with two assets, and the first of all is Bitcoin, and the second one is benchmark is S&P 500 index. And for the consistency, again, we're going to leave the default settings as is without any further changes. I'll show you quickly the key parts of the code, and then we'll jump into the key results and to the comparison table at the end, which I guess very useful thing. So I already run all the commands, and there is no need to wait for us to save your and my time. We'll jump in directly to the strategy, to alternative strategy of buy and hold, and then we'll see whether the strategy actually worthwhile or not, right? And before I start, just quick kind inquiry, if you can just subscribe to this channel and click on notification bell, because there will be actually a lot of backtesting video series ahead, and I'd like you all, my current viewers and my prospective viewers, to keep updated on that. And also please leave any comments related to this and to the previous videos on this channel. Okay, let's jump in, and I'll stop on the key ones because the code itself is quite long, and I just need to stop up on the key important points. So again, we import and install all the necessary libraries, and here we define our functions. Basically, we're assessing our strategy on 5 key parameters, which is maximum drawdown, Sharpe Ratio, compounded annual growth rate, win rate, and profit factor. Okay, so I'll not stop and explain or what they are. You can find definitions on the previous videos. You can check them also on my channel. And here, what we're going to do, just to remind, the crossover strategy is when the fast exponential moving average of 10 crosses up the exponential moving average of 50, and vice versa. We actually sell when exponential moving average of 10 crosses down 50. So very simple strategy, crossover of up and down. Yeah, and we also in this video will compare how about if we just buy and hold Bitcoin for this 10 years of period of 2016 to 2026, and as well what will happen if we implement the strategy and compare it with S&P 500 buy and hold strategy. So basically, we compare its Bitcoin trading with Bitcoin investing, and Bitcoin trading with S&P 500 like investing. Yeah, these two benchmarks, and I think the results are quite interesting. But let be honest, and we'll go jump in just soon. Okay, so here is the definition of the strategy, and here is the key metrics. So again, we are using Bitcoin USD pair. We compare it with S&P 500. The time period is for 10 years, 2016 over 2026, and I got the most recent one, the most recent data from Yahoo Finance. What we'll do next, let's go and skip this part. We calculate Bitcoin USD. Again, we're using closing prices. Okay. Here, what is the logic? I already explained above. So basically, you see the positive one, negative one. It means that positive we buy when the short one crosses up, the long one, the 51, and we sell when the short one of 10 crosses the long one down. Yeah, two conditions. Okay, let's go further on. Here we calculate the returns equity curve for our strategy. Okay, this is more technicalities. Okay, so I guess this is most important part now, and we will go one by one, and then finally there is also summary table where you can also look at the results, plus there is a equity curve which we go to visualize actually our results. So basically, as you can see, for example, for this exponential moving average strategy, meaning that 10 to 50, when we buy and sell both long and short position, for example, if we execute the strategy for the last 10 years, okay, so very simple one, what we'll have is Sharpe ratio is 0.7123. So not really like perfect because it should go or be around 1, but let's say it's not bad. At least it is, let's say, positive and not below 0. Maximum drawdown is huge, and as you can see, if we allocate, for example, 1 million of USD for the strategy, we can lose up to 3/4 more than even 3/4 of our initial capital. So maximum drawdown is huge. So probably here we need to define some stop loss conditions, right? But look at the compounded annual growth rate. It's really, really good. So for example, if we do this consistently, let's say hypothetically for the 10 years, our compounded annual growth rate will be around 27%, which is really good because usually S&P 500, as you know, if you are already experienced and advanced trader and investor, this would tend to be actually 10%, but this is like almost 2.5 times higher. So this gives us a lot of return. Yeah. And this is also compounded. Of course, we should keep in mind this is not simple, but compounded. Win rate is just above the threshold of 0.5 or 50%. Profit factor is just 1.14, just a bit of more than 1. So not bad, but the red flag is maximum drawdown. Yeah, but the rest of the metrics are more or less stable and more or less gives us kind of edge to maybe to other strategies. And please recommend maybe you would like me to backtest this strategy, especially the strategy of exponential moving average of 10 to 50. Maybe let's compare it with other asset, for example, stock, forex, maybe even crypto pair, commodity, index. Please leave your comment in the comment below. So I'll be glad to consider not only buy and hold, but maybe let's consider it with other asset types. Yeah. So this is the key results. So you don't need to memorize it. Don't worry, because at the end we'll have the cumulative table where we can compare all our metrics. Okay. So let's just slowly proceed to the buy and hold strategy of Bitcoin. And as you remember, like I mentioned, that we'll compare it at the beginning of this video with itself, and then we'll go and consider how it behaves relative to buy and hold of S&P 500. So I guess this is more relative ones. So what if, for example, if we buy Bitcoin in 2016 and just hold it, so we don't sell it, and we enter the long position in 2016, whereas the signal, for example, once exponential moving average of 10 crosses up, exponential moving average of 50, we buy Bitcoin and we just hold. Yeah, we don't sell it, we don't buy it again, we don't sell it. So there is no back and forth. We just buy and hold. Of course, it will save us commission, it will save us slippage cost. Let's say it will save us a lot of burden, but just be honest, let's compare. Yeah. So what will happen the Sharpe ratio here, as you can see, is improved. Now it is relative to both long and short. It's 0.84 or 85 if we round it, right? 85. So even closer, much, not really big jump, but at least it is improving, and the maximum drawdown actually worsening. So we are getting worse positions. So we're losing not 75 or 76%, but already 83. Compounded annual growth rate is good. So actually now from 27%, as if you remember above, we are like having almost 37%. So 10% increase over time. And you see, you don't need to do anything. You just buy and hold for 10 years. And the win rate is tend to be a bit higher. But again, that means that we're just buying. There is win rate should not actually be significantly high or low because there is no ups and downs, right? And profit factor is a bit better than above. Yeah, and let's proceed slowly to the another alternative of buying and holding S&P 500. So basically, as of now, like buying, going for long and holding it for 10 years of Bitcoin, crypto pair of relative to United States dollar, gives better results. But what happening with S&P 500, we will figure out now. And let's just jump into this part and then we'll compare. So here, what will happen? We just buy again when exponential moving average crosses up 51, and we're using closing price. What will happen? Sharpe ratio. Now it's even better, both when we just buy and sell Bitcoin relative to United States dollar, or even when we buy Bitcoin and hold it. So now Sharpe ratio is even 0.9 or closer. Now it's even closer to 1. Maximum drawdown, as you can see, now much better. So there is no almost like, let's say 2.5, almost closer even to 3 times less than volatile Bitcoin. Compounded annual growth rate, unfortunately, is just 15%, or let's say 16% if you round it to the nearest hundreds, which, like, again, not really winning. So basically this like losing here twice, yeah, so more than twice if we compare to the previous two strategies. Win rate is more than 50%, good sign, and profit factor is 1.2, so more or less not so far away from the previous two. Basically, if we now jump into the key results and the key performance indicator comparison, you will see definitely that there is some advantages to some metric and of course some disadvantages to other metrics. But again, it depends on your like approach and your priorities, or priority maybe one. So it depends really, because here it is not unique or some, let's say, general approach of me saying that, oh, you know, this strategy is better or don't select this strategy. Of course it depends, but again, we are just looking what is going on, right, on the historical data. Okay, so let's now jump into the equity curve to visualize what went and what went right and what went wrong, and then we'll jump into the final table where everything is like, let's say, clear and obvious. Yeah. So here, equity curve comparison for 2016. Sorry, here should be 2026, is just a typo. Yeah, let's just do it together. And because previously I ran for the two time periods of 2016 to 2020, just to test out of sample kind of analysis, but let's now just leave it aside. And now, as you can see here, for example, the blue line is exponential moving average of strategy of 10 to 50 for Bitcoin. Now I'll show it a bit later. Now, orange line is Bitcoin USD buy and hold strategy, meaning that we buy Bitcoin and hold it for 10 years. And the green line actually S&P 500 buy and hold strategy. Yeah, when we buy and hold for 10 years. So what we see here actually. So as you can see, for example, there is huge volatility for Bitcoin, especially when you buy and hold. So most of the time, some investors who were not patient might incur losses, but those who let's say patient from the beginning, from 2016, now gained huge growth of almost 100% by today. Yeah, and for example, if we compare the beginning and the end, yeah. So what is happening with let's say exponential moving average? So of let's say buy and sell strategy, it just gives around in terms of percent of the growth. Here on the y-axis is the growth. Actually, it gives us let's say more or less of 30 to 35% over this time period of time. And for example, for S&P 500, as you can see, it is almost flat, and it gives us around just to again 10 to 15 to up to 15%. So again, it depends. Whether you are kind of sacrificing volatility over the risk and the reward. So basically, now I guess it is clear that if you have a patience to wait for the long time, buy and hold strategy is much better than both selling and buying volatile crypto, or just buying and holding broad index such as S&P 500. Yeah, so finally, let's wrap up to make this video complete. Yeah, and we will conclude with that. So here, I guess this is most important part of the code. What we have here is performance metric comparison for 2016 till 2026. And here, all the 5 metrics with 3 strategies what we have. So just to remind, as you mentioned, you don't need to worry to remember all the numbers. Here, for example, as you can see, the Sharpe winner here is clear S&P 500 buy and hold. So it's closer to 0.90. So in terms of risk reward approach, S&P 500 is better relative to exponential moving average of buy and sell. Sorry. Maximum drawdown, here is the winner again is S&P 500. Yeah, so if you don't want to lose a lot of amount of fund investing, or let's say in this case is investing, actually the most logical approach is to just buy broad index. Compounded annual growth rate, here the winner is Bitcoin just buy and hold strategy. It gives us around 37%, really good for 10 years. Win rate, meaning that I guess this is more kind of related more trading, but let's compare it with both investing approaches. So here's a clear winner again, S&P 500 index, and again, this probably because of the high diversification rate, there is lower, let's say, market risk, and there is more kind of diversification because there is only one asset. Here is 500 assets. Of course, this tend to be much better because inside there is kind of the securities kind of stabilize themselves both for those who are doing this trading, both buy and hold, or even buy and sell. And profit factor, here is the winner again, just slight winning of S&P 500. So basically, what is conclusion here is just simple enough. If you want a kind of stability, and if you want actually more kind of stable growth, you should consider just S&P 500. buy and hold strategy. But if you want really good annual growth rate, return, or equity curve, equity return, you need to consider buying and holding crypto. In our case, it's Bitcoin, right, which gives us 37%. So now it depends, of course. If you want some stability, now just buy and hold S&P. If you want more return, just buy and hold Bitcoin. But if you want to trade actively for both buy and hold, buy and sell, you need to go for this strategy. But again, this trading strategy, if you compare with investing strategies or strategy, it's like not really interesting, right? So it loses on almost all metrics relative to its kind of alternatives. So this is it, I guess. You like this video because this is more kind of analytical and in-depth video. I try to make it more kind of easy and understandable. If you like this video, please put thumbs up. If you don't like, please put thumbs down. It's totally fine. And also drop any comments on the quality, or maybe what you like, what you didn't like, what you want to see in the next backtesting videos, and let me know. Maybe you'd like to backtest maybe some kind of unique or maybe interesting, not very well-known strategy or indicator, or maybe you'd like to see other assets. Please let me know, and this will help me to define the next strategies on the backtesting and prepare content for all of you. Meanwhile, use algo-driven lab analysis for your trading and investing like activities. But again, this is just for education and information purposes only. There is no recommendation of doing that or this or that. So please treat it with caution. Yeah. So wish you all profitable trades and successful investing. Let's keep in touch and see you in the next backtesting video. Meanwhile, see you soon. Bye.